Hello guys, it's your boy Hyper again. I'm happy to have you back on my channel, and in this video I am going to teach you how to master trend identification in the forex market like a pro. Are you tired of getting whipsawed in the market, entering trades against the trend, and wondering why price keeps going the other way? You are not alone, because in this video I am going to show you how you can identify the direction of the market with clarity and confidence. And I'm going to teach you that using real price action, not just indicators. So whether you are a beginner or a trader looking to sharpen your edge, understanding trends is a game changer. Stick with me till the end. I'll also share a bonus tip that most traders overlook. Let's dive in. First, what is a trend? A trend is the general direction the market is moving over time. It is either moving up or moving down or moving sideways. An uptrend is equal to higher highs and higher lows being formed. A downtrend is equal to lower highs and lower lows being formed. And a ranging or sideways market is where price is moving in a horizontal zone. The market is stuck in a box. So the market only does these three things. It either trends up, trends down, or consolidates. The key is knowing which one the market is doing right now. How to identify an uptrend is structure analysis, and it is paying attention on the market structure. This is the foundation. Price structure tells you the story. Higher highs and higher lows is equal to an uptrend. Okay, so you will notice the market keeps breaking previous highs, and when you see the market breaking previous highs, you know that the market is telling you a story, that it is trending to the upside. So quickly, I'm going to demonstrate how the market keeps breaking highs on these chart examples that we have on the screen. So once price made this low, here, it started to break previous highs. This previous high was broken. So once price breaks it here, it finds support at about this same level in the chart. Okay, so this is the low, this is the high, this is the higher low, and this is the higher high, this is the higher low. Now the market broke through this one too, all the way to this place. Notice how market respected this level here, because it is trying to tell you that I am using my previous areas as support. I am using my previous areas as support. So as you can see, the market kept on breaking previous highs. So once price breaks a previous high, it uses that level as the new support level. So this high was broken and price found support at around that level. So that is basically how you do it. And if you take your trend line tool, you will see that if you mark the swing lows, the market is in an uptrend. This was a major sweep of liquidity, and that is it for an uptrend. How to identify a downtrend? So the price structure tells you the story here as well. Lower highs and lower lows indicates a downtrend, And when you see this in the market, you will simply know that market is breaking structure to the downside. So let me quickly show you what a downtrend looks like. So once the market made this, once the market took this high right here, it started to break structure to the downside. So this leg was the one that swept this high. So we are going to take it as our first area or our first level of break of structure. So right here, the market broke this previous structure. I like to use the bodies of my structures. So once price broke it down here, it tested it again and retested it again and again, telling you that it wants to really get out of this zone. So once price broke down this structure, we confirmed a downtrend. So what we are going to do is that we are going to take this leg to this side. Okay, so right here, price broke this previous structure to the downside, and once price was ready to continue the downtrend, it retested it here and continued to send price to the downside. Okay, sometimes you may not see this to be clear, these swing points to be clear. You can equally use the swing points on the far side of the chart once price breaks it down to use it as your area of resistance. So this is basically how you identify a downtrend. And if you want to confirm a downtrend, you can use your trend line tool here and mark out the swing highs. Okay, so once you've marked out the swing highs, you'll see that price is using it as area of resistance, and once price broke above it, we will be expecting price to continue on the upside. How to identify a sideways or consolidating market? When you look at a sideways or consolidating market, you will see that the market is neither going in an uptrend or going in a downtrend. The market is practically stuck in a box. There are two ways to identify a sideways market. You can either use the rectangle tool and mark out the box. As you can see, I marked out the high and the low of this box. I used this high and this low to mark my box, and as you can see, the market is consolidating and smart money is building orders, and nobody knows where this market is going to. So it is best to stay out of the market when it is consolidating. The second way you can mark out a consolidating market is using your trend tool line. You can easily draw out a line. If you want a straight line, hold down your shift key and it automatically gives you a straight line. So you can use a trend tool line to mark out your consolidation and wait for the market to break down or break up. So this is exactly what happened after this consolidation. Smart money started to take price to the downside. Bonus tip. Here is a gem most traders overlook. The essence of time, time of day, and the trend is equal to an edge. You have to know the time of the day you are waiting for these scenarios to play out. During the London and New York sessions, you actually see trends, and they are more likely to either be a continuation of trends but during Asian session, price may consolidate, so context matters in everything. Common mistakes to avoid: 1. Chasing after price without waiting for a pullback. So guys, assuming you have been watching the market consolidate and eventually it breaks out, there is no need to chase price. You have to wait for the pullback. I will give you an example with what I have on my screen right here. So after this consolidation, the market eventually broke down and closed with this candle. Some people would have started filling in their short positions from here, but if you actually wait for price to pull back to your trend line and make an entry, you will actually be in a safer place and even make higher risk reward. So whenever price breaks down, avoid the common mistake of not waiting for a pullback. Always wait for a pullback before you enter your position. So another mistake to avoid is using too many conflicting indicators. As you can see, I only trade price action, and I don't think you have in any of my videos seen me use an indicator. Price action is king. Indicators lag most of the time, so it is best you learn how to read price without any indicators. The third common mistake to avoid is misreading consolidation as a reversal or a trend. Okay, if you don't have your range of consolidation marked out, just like I did here, you may mistake this little trend here as an uptrend, or you may mistake this little trend here as a downtrend. And if you do that, you may have yourself to blame. So trends don't reverse every 5 minutes. Let the chart speak to you. Zoom out and think like the big players. Reading trends has helped me a lot. So most of the times when I'm expecting a retracement into a time of the day, I will wait for my trading time to come so that the retracement may end up falling on the extreme side of my swing points that I previously marked. So I will wait to know whether price closes above it. That means price rejects it or price retests it. So context matters a lot. Reading and identifying the direction of the chart will help you not to be lost when you are trying to trade your way through a session. Identifying trends is the best thing that can happen to you. Once you learn how to identify trends and merge it with time, you are going to come up with an edge that will help you navigate the market more easily. So don't even open a trade if you don't know the trend or you don't know where the market is going. Okay, it is going to be an absolute disaster. So learn how to identify your trends and do that on the higher time frame. Please identify trends on the higher time frame because it keeps it more accurate. There is a lot of fluctuations going on the 5-minute chart. Don't mind that I am showing you this in the 5-minute chart. Yes, because price is fractal. Yes, price is fractal. Whatever happens in the 5-minute chart happens in the 1-month chart. But the higher the time frame, the more accurate a level is to hold. Thank you for watching this video. If this video helped you to identify trends more clearly, drop a comment in the comment section. Let me know what part of the video helped you the most. Don't forget to like and subscribe and hit the bell so that you never miss a trading tip. I break things down precisely, okay? And I do that with precision, no fluff. Until next time, keep it simple, keep it sharp, and trade with me. No emotion. It's your guy Hyper, and I hope you found this video insightful. I'll see you in the next one.